How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on gold versus the US dollar. As you can see, we had an outside bar range here on Tuesday. Tuesday took out Monday's high and Monday's low. This often throws a lot of traders off track because they're looking for momentum or breakout. So when price breaks the previous daily high, there's some traders around in the world that are looking for price to continue higher the following day, and vice versa. When price breaks a previous daily low, there's some traders looking for that breakout and a continuation lower to the next day. As you can see, the following day during the election, right, last night, we can see this candle runs up and fails to take Tuesday's high out and then fades all the way back down into this weekly busy, this buy side imbalance, sell side inefficiency we had here on the weekly chart. Let's take a look at that real quick. You see that price reprice right into it very quickly. Last night, I was trading the Asian session, and you'll see how we were able to use that model to potentially get a one-shot, one-kill and find a very pivotal moment during the Asian session during the election. Now, I don't recommend or would have recommended anybody to trade last night, but we were able to find some trades last night during the Asian session with the model. So, though we saw sell side rated going into the Asian session, so this is the start of the Asian session. Let's mark that off. This is the start of the Asian session. So that's the Asian session open. Anything above it is going to be a premium. Anything below it's going to be a discount. So if I'm on the side of speculating lower prices for gold versus the US dollar, I would want to wait for highs to be broken. It's a more ideal scenario for me, at least in my opinion. Vice versa, if I was looking for gold to go higher, I would wait for price to take out a low and then look to buy. Now, as you can see, price came down and took out some type of sell side here. Right after taking out that sell side, you can see how price quickly reprices and runs back up. But that's not what I was concerning myself with. I was looking for a selling opportunity, and I wasn't going to sell off of momentum or a break retest. I personally do not look for break retests and continuations lower. I'm looking for a reversal or a turtle soup. So since I was speculating lower gold prices and higher dollar, I was waiting for some type of buy side liquidity pool to be rated. So you can see buy side was rated here. Price also runs back into Monday's high. You see Monday's high right here, that same level. It runs into it, and then it failed to take out Tuesday's high. You see that? So I know this is still Tuesday. It looks like it's Tuesday, but this is part of Wednesday's daily candle. Wednesday's daily candle fails to take out Tuesday's high, but it retests that level, that Monday high here. Buy side liquidity pool was rated here, and that's where I was looking for a short. So let's take a look at that on the lower time frame. Go on the 1 minute chart. And you can see our price dropped below, rated that sell side here on the 15-minute chart, 15-minute swing low, and then found some type of sponsorship and longs to the upside. But that's not what I was looking for. I was looking for something opposite. I was looking for price rating buy side here, right, during this dead zone, right, 12 p.m. to 8 p.m. Generally, you're going to see consolidation. As you can see, time and time again, we talk about this. There are certain moments in the market we shouldn't be trading. These are one of them, or this is one of them. The New York lunch, 12 p.m. to 8 p.m., most likely going to run into accumulation. They're building up market order sentiment, buy side liquidity and sell side liquidity. It's just ranging. And they're waiting to break the range high or range low and possibly fade it, or possibly have a continuation breaking that range high or range low. So it broke that range high, it broke the range low, faded back up and broke the range high. And now this is where I found the entry. And you guys know I like to keep the same entry idea. Nothing changes. It's going to be a fair value gap that has a swing point inside of it. You can see there's a swing low 1, 2, 3. There is speed through that swing low. That's the entry. I'm looking to go short there. So price returns into that, hits it perfectly. We went short, and we're holding for lower price action. Looking for price to at least get back down to the Asian session open, and it did. And this is going on while the votes are coming in for the election. Dollar was running super high. UJ ran high. UCAD, U Swissy, all the majors, EU, GU, NU, and AU, they all sold off dramatically. And we were able to get that final TP. It was a great trade. And then throughout the rest of the session, I felt like we knew who was going to become the new U.S. president. So things kind of calmed down. I was looking for a small reversal. And we can see here, right, we'll talk about this one, this setup too. Bullish order block theory, right? We had a down close candle. Price shot up really fast, right? There was a change in direction. and I was waiting for price to return back into that for that long. Price did, so I went long there. Stop loss below the order block or some type of swing low. And then after that, we got that nice dynamic response after hitting that PD array here, that discount PD array. Notice this PD array is forming where? Below the Asian Open. The start of the Asian Open, this order block is forming below it. So it's in a discount. So it's a discount PD array. Price taps it. There's some type of reaction. After hitting it, we get an efficiency, right, or speed to the upside in one direction, which is buy side. And right there, I wanted to go long inside that fair value gap at the top here. And I was able to get a little something on the long side. And by midnight, I scaled out. I felt like I was getting too greedy. We already won. We shouldn't have even been trading this night, but I did anyways. And I closed out all positions. We were able to get the short and the long. Great trading day. And after that, we could see how price continued to sell off into today. So right now, currently, my stance stands with a bearish gold and a strong dollar. Now, after breaking a swing low, I like to define that as bearish momentum. We did break a swing low here, which was early signs that maybe there's potential continuation going lower towards the break. We just need more signs of what? A lower swing high. And we did get that. We broke a swing low here. This is the swing low. Make it blue. And then we got a lower swing high perfectly right here. So take a look at it. You can see how there's a swing low 1, 2, 3. That's a swing low. It broke here. It was broken here. And then price printed a lower swing high. 1, 2, 3. It's lower than this swing high up here. And price continued to sell off. Now at this point, what I would recommend, right, if we are strongly on the side that gold is going to continue going lower and dollar is going to continue rallying, what I would do is I would wait for a lower swing high to then get in short, right, to go short. Or, right, if you're someone that's a little more aggressive, you wait for up close days to then sell, right, for this sentiment. So any up close candle that comes into the market, we would sell the following day, right? Or if we get a lower swing high, and I expect some type of retracement, lower swing high, and then we sell off. So that's what I would personally be waiting for. Now, it's a large candle that shot down. I do think we might get some type of retracement, at least 50% of this candle, right? Just taking an educated guess, at least 50% of this candle, or maybe a retest on an old low, right? Maybe this retest here on this low, maybe get a lower swing high there. But as of right now, that's where I stand with gold. Let's take a look with GU. See GU very similar, sold off today. See, that's that Larry Williams smash candle. Been talking about that recently in the chat. Smash candles are one of my favorite entry techniques. It catches a lot of traders off guard. You catch a lot of pips on it. You can see this candle closes above these highs. Again, breakout traders would probably think, okay, the next day it's going to continue pushing higher. And it does. It runs out the previous daily high, runs out a swing high, buy side liquidity pool over here, and it just fades right off, distributes really quickly, and it runs right back down into what? Sell side. So going from buy side to sell side, all while what? Moving itself above the opening price of the month of November, being in a premium. Let's not forget that. November opening price. Price pushed above the opening price in a premium and then sold off. So traders might have been expecting, okay, maybe British pound is going to continue going higher. But here we can see market had other plans and sold off, and it sold above the monthly opening price because it's ideal to sell at higher price action, and it's ideal to buy at lower price action. At some point, right, at said point, the market has to trend, and it's going to continue to sell in the discount. Regardless of it being ideal to buy below the monthly opening price, doesn't mean that every buy condition is going to be warranted and going to continue a new leg back up. Because if that's the case, we'll always see the market do this back and forth, buy, sell, buy, sell, buy, sell. It has to trend, and it's looking for higher time frame liquidity pool, and it's trying to get somewhere by a certain time. So every 20 days, the market is going to do something. That's why we use the IPTO cast forward. Every 20 days, the market's going to seek new buy side, new sell side, or it's going to be range bound for the next 20 days. That's what I like to speculate. So far, we broke a swing low. Probably going to see price either retest this last up close candle as a bearish order block theory and then go short. Let's see if that happens and unfolds. The dollar index, let's just briefly look at it. Dollar's been bullish for a while, since back in end of September going into October. We had higher swing highs, higher swing lows, price protecting swing lows and trading away from them, price printing down close candles and trading away from them. And we can see most recent time, we probably rated some sell side. Let me see. Rated some type of sell side liquidity pool here, the most recent one here, and then pushed up. Again, smash candle idea. This candle closes below lows, so it looks like the following day is going to sell off as well and continue going lower. Instead, price turns around quickly, catches a lot of traders off guard. Larry Williams would suggest you buy at this candle's high. If price returns to this candle's high, that's where you're buying. And you can see, look at all the strength that pulls into that. As soon as it gets there, and little to no drawdown for some of these entries that recently happened for this smash candle. Hopefully you found this insightful. We'll just do a little recap before we end. Again, gold sold off. I want to see price probably give us some type of retracement or some type of fair value gap. Maybe the next candle Thursday sells down, leaves a gap open, and then we trade into that gap and then we sell lower, getting a lower swing high and continuing to take out the up to 20-day low possible target. Hopefully you found this insightful. Peace.